You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guests. John and Lydia Murphy, welcome.
Good morning.
Good morning.
Good morning. Glad to have you with us. And let me remind you, if you ever have any home or finance related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. No, we are not going to be celebrating National Hair Gloss Day today. Not doing that. I don't have any hair, so nothing to worry about there. Nothing to think about on that one. And no, I don't like beer, so we're not doing IPA Day. We're not even going to talk about Bud Light. But that's talk about that one. You know, I think I need to put that person that ran that Bud Light campaign in the same. I wonder if she's going to go be a member of the Federal Reserve soon.
Such an idiot.
She could be a member of the Federal Reserve real easily with that one. National Watermelon Day. Now, I will admit, I really like watermelon. Now, I'm not sure it's good for me, but because they tell me that there's creates a lot of sugar. But, you know, I like watermelon. I did see something on one of the social channels that might make watermelon even better if you can do that. You cut a hole in the watermelon through the rind and put a funnel in there, and maybe or maybe not, you're going to pour some vodka in there. Just throwing that out there. I don't know if that's, of course, I might have to try that one. Josh, it looks like you've tried it. Okay. And, you know, I don't have it here. I should have brought a sample here. Grab some nuts day. There is no way in the world I am going anywhere with that one. That could only cause trouble.
Damn!
Yeah, but I'm going to throw a little bit out there. Going to the Angel game tonight. I haven't gone to an Angel game yet this year, so I'm going to go to the game tonight. We might need to grab some nuts on the way to the stadium. You know, I don't know if I want to pay. What I think they charge $7 or $8 for a little bag, and you can go over to Vaughn's and pay 99 cents, something like that. Oh, well, let's take a look at what's going on in the world today. The Dow Jones Industrial Average is down 37 points. S&P 500 is down 8. The NASDAQ is down 440. Oil up $1.82 a barrel. $1.82 a barrel. We're at 81.31. If you remember, wasn't that long ago that we were down in the high 60s when President Biden was asleep. Well, he's still asleep, but he could have filled the petroleum reserve at that point, but he doesn't. Let's see. What are we doing in gasoline, though? Here in the form of the Golden State, $5, 2.5 cents a gallon. $5.02 a gallon. Yeah. Yes, we did have to bypass Washington State. They were leading the country at $4.97. They've held steady. We've gone up. Josh, you've gone up a little bit, not nearly as much as us. You're over there at $4.32 a gallon. Processor Jody, $3.85. Figures, we're in the 5s, she's in the 3s. Brittany's in the 3s at $3.97. And our tremendous underwriter, Lori, $3.42 a gallon right there in Louisiana. And yet we still sit here in California. Although, I can within about 90 minutes, I can be at the ocean, I can be at the desert, I can be in the mountains. Not a whole lot of people can say that. Can't afford to go to any of them because gasoline's at $5 a gallon. But that's a whole different subject. Moving right along, let's see what's going on. Interesting. Warren Buffett dismisses Fitch's downgrade. Interesting, Mr. Buffett. Have you noticed what the 10-year Treasury is doing since that happened? Oh, yeah. He doesn't need to worry about that because he's got billions of dollars. The rest of us mere mortals, we have to worry about it because we're watching what's going on in the world right now. 10-year Treasury, it's at almost a multi-year high. We haven't quite got there yet, but we're getting closer. Unreal what's going on with the bonds. Interest rates, they're moving higher. They've been moving higher. They'll continue to move higher. You know what the biggest problem is? About a third of the U.S. debt, and boy, do we have a lot of it. About a third of it has to be refinanced. Now, if you remember, up until about June of last year, debt was running, the 10-year Treasury was a low number. It was, in the twos. Now it's in the fours. So we're going to double the cost of that interest payments on a long-term basis. That's where the issue is. They're not talking about it, but that is the issue. The other issue is inflation. So what's the Federal Reserve going to do? Well, the Federal Reserve, yes, I do have their call sign.
Such an idiot.
Yes, they are idiots. They're going to raise interest rates because they need more pain. And we're watching that. They need to raise rates. They need to break more. Can't do much more breaking than they did to Yellow Freight because they're out of business because they couldn't refinance their debt. CVS, they just laid off 5,000 people. But the Federal Reserve, they're looking in the rearview mirror. They're going to tell us today, well, the interest rate, not the interest rates, but the employment numbers aren't that bad. Well, why don't you look forward, Fed? When do you think these things are going to happen? When do you think they're going to come to pass? How many months in a row can you have the largest state in the union having the largest unemployment claims, the jobless claims, and not have that hit the rest of the country? But the Federal Reserve doesn't look at that because, yes, you know it.
Such an idiot.
Yes, they are
Such
idiots.
An idiot.
Unreal how that
Idiot.
continues to happen, and they won't change course. They're talking about raising rates some more, although we did see that the Bank of England raised less than what they were thinking about today. They went up a quarter of a point instead of a half. We've got the ECB maybe slowing a little bit, so we're going to watch all of those and see what happens with their rates. Why do we watch those so closely? Because maybe they might lead to what's going to happen. Oh, sorry, I just pulled up another picture, and it's got Warren Buffett on there. The guy that says, let's raise taxes because he doesn't pay them. Read his book. He tells you how he avoids paying taxes. Right there in his book, he owns the insurance company. You got to love hypocrites like Buffett. It just baffles me how nobody calls him out. Of course, then again, in our media nowadays, they don't call out anybody for anything unless your name's Trump. Think about that. Now, I'm going to suggest, yes, I know I'm in California and Trump will not carry California. But some of the things that Jack Smith, and I have a different name off air for Jack Smith, but I can't use it on air. I'll get in trouble. But Jack Smith's coming up with some of these different issues. Do you notice one day after there's anything that comes out negative about Biden, Jack Smith adds more charges or allegations? I mean, now Jack Smith, I'm not an attorney. I know that there's a First Amendment that the former president, has the right to say what he wants to say. First Amendment doesn't just give us the protection for things that we like. It gives us protection for things that we don't like. Think about that. But Jack Smith, he is supposedly an attorney. Unbelievable. But now he opened the door. Unintended consequences from idiots. We should have a segment on that, Josh. Unintended consequences from idiots. Right? So what did Jack Smith do for the country now? Well, he just opened the door that President Trump and his legal team can now go through and depose all the people that the FBI wouldn't do, the Secret Service wouldn't do, the states wouldn't do. And maybe he can even educate them on the Constitution. Because even though Gavin Newsom here in California, he goes and changes the law on his own, well, the Constitution says that the elections are determined by the state legislatures. Now, maybe Gavin Newsom doesn't understand this because he's busy at the French Laundry too much, but maybe he ought to know that he's not the legislature. That would be the state assembly and the state senate. All they have to do is go and ask them that question, and you find out that the entire 2020 election was unconstitutional. Just throw that out there. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, we're going to talk about employee retention credits. What is that? Are you an employee? Are you the business owner? We'll talk about it, how inflation affects mortgage rates. We'll talk about that. We might even get into a little bit on student loan debt, things that are going on there, and your credit matters, all that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit RonSiegelRadio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. 1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. Make the call. 800-306-1990, 800-306-1990. And I am a big fan, the transition loan. If you're worried about not getting the house you want and being homeless, well, how about buying that new house, closing on the new house, and then worrying about selling your departing property? Transition loan. It's one of the new products that they have over at Geneva Financial. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. We do not know APR, points paid, points received. They just give us the locked rates with consumers across 42% of all mortgage transactions nationwide. All green again. And remember, I told you, this is like golf. We want to see the red numbers, but we've got all green. 30-year conforming loans yesterday locked at 7.02. 30-year jumbos locked at 7.232. That was up. 30-year FHAs, 6.918. That was up. 30-year USDA, generally no down payment. In the rural areas, 6.919. That was up. And the best loan on the market for those that earned it, that would be the 30-year VA loan, 6.758. That was up. Every clean sweep, they're all in the green. We don't like that. But, you know, as they say in the old school, it is what it is. We can't control them.
It is what it is.
What's driving the rates today, though? Because they're getting worse. So let's take a look at what's driving them right now and what's happening right now. The 10-year Treasury up 11 basis points, 4.17, getting close to the October highs that we hit last year. The S&P 500 down 9.48. Mortgage-backed securities are down 37 basis points, which means interest rates are up. Ow! Why? What's going on? Well, got the big BLS and household survey jobs report. Those are coming out tomorrow. Richmond Fed President Barkin seems to be a little less optimistic on the economy. We think that he's looking at a good chance of a recession. Does that surprise anybody?
Surprise, surprise.
He'd likely not be in the camp to hike rates in September. Here are some of his comments. Plausible that inflation normalizes soon and economy dodges a downturn, further slowing almost surely on the horizon. Businesses still see healthy demand. Manufacturers and construction seeing boost from government investments is a fancy word of saying government spending. They're not investing in anything. Investment means you have a return. Government doesn't get a return. They keep spending more. Consumers continue to spend. Most recessions come suddenly, brought on by sudden shocks. Well, we've been waiting for this one for a long time. Several industries in a mini recession already. Again, we've been talking about that one. Slowing to be brought on by reduced fiscal spending and tightening credit conditions. Yellow Freight found that out. If the recession occurs, will be less severe than recent downturns. We got initial jobless claims, 227,000 initial claims. Again, California led the way with 41,000. No one wants to talk about this. I wonder if in the debate in the fall between DeSantis and Newsom, I can't wait for that one. So they're going to debate in the fall. And you know how Newsom keeps telling everybody how great California is doing. Unit, but California is at 4.5% unemployment right now. 4.5%. Unit labor costs increased 1.6% in the second quarter, which was lower than the 3.3% in the first quarter, 1% lower than estimates. Good for wage-pressured inflation. Workers were more productive, and productivity rose 3.7%, almost double the estimates. So we're watching for the jobs report. That'll be out tomorrow morning. Previous reading of 209,000. They're expecting 200,000 this time. We'll see what happens. That is the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products, everything from the great VA loan, FHA conforming jumbo, and they've got their own money lending, private money loans. So all of that available from Geneva Financial. So let's talk about and learn about, we're still dealing with COVID. It kind of just baffles me. John and Lydia Murphy are with us. Good morning.
Hey, good morning, Ron.
Good
Glad
morning.
to have you with us. So let's talk about what is an employee retention credit.
Well, first of all, I didn't know it was Watermelon Day, so I think Lydia ate half of one yesterday, so she's going to have to finish off the watermelon for today for sure. But
Nice.
Thanks for having us. And I kind of stumbled across this. I'm a real estate and mortgage professional like yourself.
Now, wait a second. Lydia had the watermelon yesterday. Don't tell me that you went for the hair gloss.
Oh my God. No.
Throw you for a curveball there. Sorry about that.
That's okay. Yeah, but I came across this program. It was born out of the CARES Act in 2020, and it was actually it's for businesses that have W-2 employees and they're paying payroll taxes, and so it was a way for the government. It's not like money printed out of thin air, so to speak. It's more like a rebate of payroll taxes back to business owners that kept their employees on the payroll and kept them employed, during COVID. And so it's up to, like $26,000 per W-2 employee. And the employer can use the money or this, it's really an overpayment of payroll taxes, and they're allowed to use the rebate, so to speak, for any purpose.
So wait, back up. What do you mean by an overpayment of payroll taxes? What does that mean?
It's basically a rebate. It's not, government money being printed and handed out. It's a rebate of payroll taxes that they paid, in.
So do you have to document that how much the payroll taxes were? Is that part of the process?
Yeah, it's not a loan. So when they get their money, they don't, it's just, it goes straight to them. But they do have to produce documents to document it. Essentially, it's the 941 quarterly reports and payroll to match. And they produce the documents, and our partners calculate exactly how much they're going to get in the form of the rebate. And then it's a game of hurry up and wait for the checks to come. It typically takes about 6 months for them to start.
6 months.
Yeah.
I think you have about 6 minutes to pay your payroll taxes, and they give you 6 months to get them back.
Well, it's hard to get the money back from Uncle Sam. We all know that. So.
Isn't that the truth? So do you get a percentage of what you paid in, or how's that calculated, or what's the, how does everybody get 26,000? Is that just a flat number?
That's like the maximum you can get. The calculation depends on, how many hours the employees worked and what the actual payroll was. And if they did receive PPP, that there's a reduction in the amount that they actually get. But 26,000 is the max per W-2 employee.
Okay, so if your people are, like many people are in real estate where they're 1099, that doesn't count then.
Unfortunately, it doesn't. Although I have had some real estate people that have like paid W-2 processors or assistants on their teams qualify, but 1099 does not.
Okay, so this you say that, I think on one of the areas it's called an employee retention credit. So do you actually get a check back, or is it a credit off of your taxes, or how does that work?
That's a great question. You actually get a check back. So, before the check comes, you'll get this notice of overpayment, and then the checks start coming in, and it's a physical check, and it comes from the Treasury.
Interesting. Okay, and do we have to pay it back, or is it like that PPP? You had to figure out. Sometimes you paid it back. Some people didn't have to pay it back, or you had to apply once you went through that. How is this retention credit work?
Yeah, they don't have to pay it back. In fact, the very first client that I had, he's a friend, and he owns a tire recycling plant in Texas with about 50 employees. And he was really skeptical of the whole program. People were telemarketing, calling him. He saw it on the TV and the radio and so forth. But when I brought it to his attention, he goes, John, I know you and trust you, so I'm going to apply. He goes, but I'm certain I'm not going to get it because I made more money during COVID than before. And he was onto something there, because in the beginning, the only way to qualify was through revenue reduction when they rolled it out in 2020. But in November of 21, they revised the program where businesses could qualify with a full or partial suspension of operations. So you might see restaurants that would only do takeout, or they put up the plastic shields and only let every other table be served and that sort of thing. So that would be a partial, suspension of operations. But in the case of my friend, he qualified because of supply chain disruption. So he, number one, he made more money during COVID. Number two, he did get PPP. And so he thought for sure that would disqualify him. But he was eligible because of this big tire recycling shredding machine that was on back order for well over 18 months. And so that was the component, the supply chain. And, a lot of businesses suffered supply chain disruption during that time. And so
that can be pretty interesting, because I think almost everybody had some sort of supply chain issues. I mean, maybe they just couldn't get their trash bags in time or whatever. So you might have to have your consultant be a little bit creative on getting that supply chain discussion. We're going to continue that conversation when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, more with John and Lydia Murphy. We're talking about the employee retention credit. We're going to also chat a little bit about how inflation affects mortgage rates. All that and more. Reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you like many of your neighbors trying to figure out how to pay off your debts so you could retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrmoney.com, rsrmoney.com. Let's take a look and see what we're going to chat about today in the segment, how inflation affects mortgage rates. When you read about the housing market in the news, you might see something about recent decision made by the Federal Reserve. Yes, and you know my feelings about the Federal Reserve.
Such an idiot.
Yeah. But how does this decision affect you and your plans to buy a home? Here's what you need to know. The Fed is trying hard to reduce inflation. And even though there's been 12 straight months where inflation has cooled, and if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're actually seeing a chart that shows the inflation continuing to moderate. While you may have been hoping the Fed would stop their hikes since they're making progress on their goal of bringing down inflation, they don't want to stop too soon and risk inflation coming back up as a result. Because of this, the Fed decided to increase the federal funds rate again last week. As Jerome Powell, chairman of the Fed, says, quote, "We remain committed to bringing inflation back to our 2% goal and to keeping longer-term inflation expectations well anchored," unquote. Greg McBride, Senior VP and Chief Financial Analyst at Bankrate, explains how high inflation and a strong economy play into the Fed's recent decision. Quote, "Inflation remains stubbornly high. The economy has been remarkably resilient. The labor market is still robust, but that may be contributing to the stubbornly high inflation. So, Fed has to pump the brakes a bit more," unquote. Even though the Fed fund rate hike by the Fed doesn't directly dictate what happens with mortgage rates, it does have an impact. As a recent article from Fortune says, quote, "The Fed funds rate is an interest rate that banks charge other banks when they lend one another money. When inflation is running high, the Fed will increase rates to increase the cost of borrowing and slow down the economy. When it's too low, they'll lower rates to stimulate the economy and get things moving again," unquote. How does this affect you? That's the important part. In the simplest sense, when inflation is high, mortgage rates are also high. But if the Fed succeeds in bringing down inflation, it could ultimately lead to lower mortgage rates, making it more affordable for you to buy a home. Another graph that shows that when inflation decreases, mortgage rates typically go down. Take a look at the graph again if you're watching us on any of our socials. As the data shows, inflation is slowly coming down, and based on historical trends, mortgage rates are likely to follow. McBride says this about the future of mortgage rates, quote, "With the backdrop of easing inflation pressures, we should see more consistent declines in mortgage rates as the year progresses, particularly if the economy and labor market slow noticeably. Bottom line, what happens to mortgage rates depends on inflation. If inflation cools down, mortgage rates should go down too." If you want to have a specific conversation about these things, give me a call, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. That is the real-time real estate segment, again, brought to you by rsrmoney.com, rsrmoney.com. We're continuing our conversation, learning about the employee retention credit. John Murphy is with us. We're learning about this credit, who gets it, who qualifies. One of the things, John, I always worry about on these things, especially when you start looking at, the government and not that I don't trust the government, but I don't. You look at some of these things and you say, okay, they changed the rules in November. Are they going to change them again? Do we have a long time? Do we have to get on this right away? What's our story here?
I'm told that there's maybe up to 20 months left. So, the program is alive and well. It's just, we're just trying to reach out to businesses that maybe haven't heard about it or haven't found out if they're eligible or not. And back to that Tom story, it warms my heart because when he got about 800,000 in credit back, and he was waiting on the last.
Whoa, back up. He got a check back from the government for $800,000.
Actually, it was 6 checks because there are 6 quarters that you can qualify. Would be the 2nd, 3rd, and 4th of 2020 and the 1st, 2nd, and 3rd of 21. So he got 6 separate checks, but the last 2 were a couple $100,000 each. And when those came in, he actually used that money as a down payment on a business loan. It came in right at the perfect time where he needed to come up with about $400,000 to expand his operation and install a crumb line. And it was like the money, it was just like heaven sent and perfect timing. And he expanded his business and used it for that purpose.
That's pretty amazing because you said he had 50 employees, right?
Yeah.
So that's well, for anybody, that's a significant amount of money. I mean, you start looking at $800,000. So in his case, it was $16,000 per employee. And one of the things I want to share on this also, because just in me doing a little bit of talking with friends of mine as we get ready to have this conversation this morning, was the issue that one of the companies I spoke with, they were actually told that they did not qualify. And you hear all these commercials on TV and whatnot right now, which I don't trust half the commercials on TV, except mine. But the bottom line here is that, with these rule changes, a lot of folks that were told that they didn't qualify really need to go back and revisit, because a friend of mine just got a check, I think on Wednesday, and they had been told they didn't qualify, and now they do qualify. So, are you seeing that a lot, John?
Yeah, I have clients that were told they didn't qualify, and it's not like negligence on the part of their CPA or anything like that. It's just that they changed it in November of 21. And so, but most CPAs are busy just doing their day-to-day, doing their regular business. And so, they might not be up to speed on, how they can qualify through like supply chain or other ways. And so, and just like any other business or industry, there are some bad players out there that are advertising and not maybe taking advance fees and things of that nature. So yeah, I mean, it's
speak about that a little bit, John. What do you mean by taking advance fees?
Well, taking the fee and then filing later and to get the rebate. I mean, our company doesn't do that. We did have an option where you could pay a fee in advance and pay a lower fee and pay in advance, but they decided to steer away from that, and we only collect a fee after the client receives the full refund. So
when you're saying that, does that mean does the refund go to you and then you pay the difference to the client, or does the client have a debt to you once they collect?
Great question. Yeah, the refund goes directly to the client, and then before they filed it with the IRS, they just sign a fee agreement. And so after the client gets their checks, then we send them an invoice and they pay the fee.
And how does that work? Is it expensive? Or I mean, Is it like you guys get 90% and the client gets 10, or how's that?
It's the fee is 15%. There are some competitors out there that charge more than that, but what I found is that all the businesses I've dealt with were, okay with the fee simply because it was like found money. It was
Sure.
It was money that came in. Like my friend Tom, he really didn't care too much about the fee because he didn't even know he was eligible for this to begin with.
Yeah, if I was Tom, I'd be sending you a real nice trip or something to go somewhere. If you don't realize that you're going to have entitled to anything, and then you get $800,000 that you don't have to refund. That sounds to me like he might be a better friend now than he was before.
For sure. He actually bought dinner in Croatia a month ago. So that he was grateful and thankful that it came his way.
That's pretty nice. That's a long-term dinner. Sounds good. Okay. So what kind of documents do I need? Am I going to be looking at like an SBA loan where you have to give everything but your firstborn, or what kind of documentation is required?
No, it's actually pretty simple. It's just anybody that does payroll is familiar with 941 quarterly reports. So they just after they go through a questionnaire, then they upload 941 reports and payroll that matches, and we can assist with that. But most companies are pretty well equipped to provide the documents that are necessary.
Now, I hear these commercials, and I don't even remember, and I should have paid attention to them. Commercials on radio and TV about the employee retention credits. What is tax rebate specialist? Is that a separate entity or a facilitator or a government entity? What is that?
That's a great question. Tax rebate specialist is like the sales and marketing side of our business. We contact businesses, introduce them to the questionnaire, maybe help them with documents and things of that nature. And then our processing partner, ERCS out of Utah, they review the documents, provide a financial analysis, get the forms signed so that it can be submitted to the IRS, and then they file the documents with the IRS and collect the fee when it's all said and done.
Well, that's pretty massive, because when we come back, I want to talk about ERC specialists, because they've got a pretty significant board of directors there that lends a huge amount of credibility. So I want to talk about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. We may also get into a couple things on student loans. Yeah, they're coming back, so you might want to know about that as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Are you a renter and tired of making monthly payments, paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender. Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@RonSiegelRadio.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at ronismylender.com. That's ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Borrow Smart segment today being brought to you by rsrstudentloanhelp.com, rsrstudentloanhelp.com. If you have student loans, 31 million Americans do. Or if you know someone that has student loans, that would be 1 out of every 6 workers in this country has student loans. Maybe you want to buy a house and they're telling you can't do it. Think about this. Go to rsrstudentloanhelp.com, rsrstudentloanhelp.com. It'll take you about 30 seconds, and all we need is 5 pieces of information, and it's going to tell you how much you can save on your student loans potentially. So obviously you need to know what your income is. You can put a guess in there. How much do you owe? How many people are in your household? And what the interest rate is on your loans. If you don't know, put 6.5% because that's the average. I just ran one the other day. 30,000 in student loans, cut their payment in half. Cut the payment in half. Think about that. So when saving $175 a month, when you go to rsrstudentloanhelp.com, our partner over there, they charge $250 to do all your paperwork for you. To me, that's about a month and a half worth of savings. Is it worth it? Maybe. Your number may be bigger because there's one, that stadium, where they're doing that Taylor Swift concert tonight. I don't want to say the name of the company. They just cost one of our listeners $3,600 a month extra on their student loan payments. $3,600 a month. Think about that. Now, yeah, they had a lot of student loans, but boatload of money. rsrstudentloanhelp.com. Anybody that you know that has student loans should be going there to check it out. That is the Borrow Smart segment brought to you by rsrstudentloanhelp.com, rsrstudentloanhelp.com. Continue our conversation. We're chatting this morning. John and Lydia Murphy are with us. We're talking about the employment retention credit. And so, John, during the break, I went and looked. And I'm looking at this, the advisory board for this ERC specialists. And the first name on there, boy, that carries a whole lot of credibility. Matt Whitaker on there. And, many people don't know the name Matt Whitaker. He was, I think he was acting Attorney General for the United States of America for a while. Or he's either Attorney General or acting Attorney General. You put somebody like that on your advisory board, that lends a lot of credibility to what you're doing.
Yeah, it does. He's a former U.S. Attorney General, and Also on their advisory board is the state of Utah Attorney General, Sean Reyes. The ERC specialists, all they do is process ERC rebates. That's all they do. They have about 300 employees, lots of CPAs, enrolled agents, former fraud examiners and the like, working there in Utah. And they have deep relationships, with the IRS. So in some cases, there's really not, there's no, things could go maybe a little bit faster because of that, but they don't do anything else. And we can process these, in any state in the United States. So like, for instance, All American Tire Recycling's in Texas, and any state, any small business could be eligible. They just have to find out.
That was the next question. That was the next thing I was going to ask you: is what businesses should be reaching out to you? What kind of businesses are going to be the ones that are you find most frequently have eligibility?
Restaurants for sure. I've had many pizza restaurant, any type of restaurant, they were impacted hard by COVID. Auto body, paint and fender comes to mind just because of the supply chain. They couldn't get, equipment and supplies, but any business that, was affected by COVID, it's like a self-attestation when they fill out the questionnaire. And so, I've had clients that they keep a log of emails and text messages that they, with suppliers where they were not getting equipment and supplies that they needed, just as documentation as to the hardship that they faced, during those times.
So it might even be contractors or things like that as well then.
Sure. Contractors, construction, almost every industry. The only one that opted not to, apply was a mortgage broker friend of mine, because he goes, I don't feel like I was impacted because I just did Zoom and, it wasn't really necessary to meet in person. But most businesses felt some pain during COVID, and it's well worth their while to, fill out the questionnaire and see if they are eligible.
How do you fit into this process, John?
I'm a processor. So, if a business wants to contact me, I can help them, through the questionnaire and help with maybe uploading documents and so forth. So, I'm part of like the sales and marketing. I've got my megaphone on here today on your show just to try and make businesses aware that there is money out there for them. It's actually their own money, that had been paid in the form of payroll taxes. So they we're just trying to create awareness and let businesses know that there's a potential for a windfall.
So, and if I understood correctly earlier in the broadcast, you mentioned this is basically you can apply for it through the end of sounds like through the end of 2024. Is that it?
Yeah, I'm going to be on a call today with the CEO of ERC Specialists, Mark Sullivan. So I'll know more later today. But it's probably got a good year left at least.
Okay, so anybody that has not already got their money, you don't get a second bite at the apple. If you already got it, did anything in that changes of 2021 in November? If I got money before that, is there any value in me applying again?
Yeah, because it was revised in November 20. The CARES Act was revised to make it easier for businesses with W-2 employees. So the three things should or could have happened with your business. You could have either had one, a full or partial closure, or two, a supply chain disruption, or three, a revenue reduction. Even if you already got your PPP, and even if you made more money during COVID. But if those three things you will be eligible to receive your...
Yeah, to answer that, your question specifically though, if they've already gotten the ERC credit, then that's it. They got it.
They got it, and they're done for.
Right.
Perfect. If you want more information on this, if you want to meet John or Lydia, give me a call at 800-306-1990, 800-306-1990. I know where to find them, and I can put you in touch with them. So give me a call again, 800-306-1990, 800-306-1990. I'd be more than happy to put you in touch so you can find out if the government has money to give back to you. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. Again, that's all for Ron Siegel Radio. Again, if you want to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Getting paid by the hour and older by the minute. My boss just pushed me.